disclosure principle or concept. The full disclosure principle requires that financial statements make complete, adequate and fair disclosure of all information, which is relevant and significant to the users of accounting service with investors, lenders, creditors, researchers, government and regulatory agencies. The principle of full disclosure requires that all the material facts which help in the appraisal of operating and financial performance of an organization must be disclosed in the financial statements and in footnotes. Thus, the users can analyze and interpret the financial statements to suit their objectives. So, the full disclosure principle requires that each and every fact, or each and every material fact should be completely disclosed by the business organizations in their financial statements, so that a complete information can be given to the relevant users of accounting service, such as their investors, lenders, creditors, researchers, government and regulatory agencies. This principle requires that all the material facts which help in appraisal of operating and financial performance of an organization must be disclosed and nothing should be hidden, so that the persons who are using it may analyze and interpret the financial statements to suit their objectives, and according to that they may take the relevant decisions in concern with the business organization. To ensure proper disclosure of material information, Companies Act 1956 has provided the following. Number 1, format of financial statements, section 211. So section 211 of the Companies Act 1956 has given different formats of the financial statements, and any one of them is to be adopted by the business organizations. Number 2, cash flow statement. Everything related to the preparation of the cash flow statement and how it will be prepared, the entire format is given. Then segment reporting, how the reporting of the segments will be done. Note on accounting policies, and different accounting policies have been discussed in detail in the companies. Report by Board of Directors, section 217 of the Companies Act specifies or give the formats of the report of the Board of Directors, and which should mention Directors' responsibility statement, report on corporate governance and management discussion and analysis. Auditors report, section 216. Now, need. This disclosure ensures that financial statements give a true and fair view of profitability and financial performance of the company to its various end users. Then limitations. The information contained in the financial statements are historical in nature and reflects the past position of business organization. The information which can be measured in terms of money can be recorded in accounting. A lot of transactions, though important and have a significant impact on the working of enterprise, do not find place in books of accounts, as they are non-financial in nature, such as ineffective control prevailing in the organization, inefficient employees, market conditions, change of government policies, etc. Sometimes events are measured on the basis of estimates. In those cases, judgment of the person who is estimating the events plays a vital role in accounting, such as estimating the useful life of an asset for calculating a depreciation. So we can say window dressing and personal bias of an individual influence personal judgments. The limitation of this principle is that although the principle says that everything should be disclosed, but there are certain things which are not told to the users of the accounting information, because they are just either assumptions or the estimations that are being made to calculate certain things and to make the accounts effective. Therefore, we can say that accounting may prove to be a window dressing process, because over here whatever the management wants, that in accordance to its guidelines or its instructions, the accountant will have to prepare the accounts, and those accounts will be finalized, and then they will be communicated to the users of the accounting information, and they may prove to be wrong to the users.